Welcome to today's report, the 22nd of January 2025. Okay, so we have very interesting news, and the market, I would say, is slowly coming back alive now that we have the newly sworn in 47 President of the United States. I think now it's again a new, I would say, a new era for the US in terms of, not to say that we don't know what's going to happen next, right? But we know one thing is that there will be policy change, and that's what I refer to as the new era. So with that, I would like to kick off first today's sharing. And it's about Trump's first day policies, economic and market implication, right? So upon re-entering the White House, all eyes were on President Trump and how his administration would begin implementing key campaign promises. Markets and investors have been closely monitoring the new policy directions, assessing their potential impact on the US economy and global financial markets. So the very first thing that came in, he signed the immigration policy overhaul and border security measures. Now, President Trump declared a national emergency at the southern border, aimed at bolstering border security and curbing illegal immigration. Additionally, he designated criminal cartels as terrorist organizations and signed an order to remove automatic citizenship for children born in the US to undocumented immigrants. Another directive suspends the US refugee resettlement program for 4 months, though details remain unclear, right? So these immigration measures could have significant economic implications, particularly for labor-intensive industries such as agriculture, construction, and manufacturing. Stricter immigration policies could lead to labor shortages, potentially increasing operational costs for businesses and impacting economic productivity. Next is the TikTok ban delay, right? So that's the second thing that he signed in. And Trump signed a directive postponing the implementation of a law banning the Chinese-owned social media platform TikTok for 75 days, citing the need for further assessment. Now, this delay provides time for a more comprehensive evaluation of the potential national security concerns and economic implications of the ban. However, uncertainty remains regarding future actions, which could impact business operations that rely on TikTok for marketing and engagements. Now, the tech industry will be closely watching developments as any definitive action could have broader implications for US-China relations and data security regulations. Okay, this is one thing that you need to really look into. Next is the creation of the Department of Government Efficiency, better known as DOGE. I don't know why I like to call it doggy, because in the first place that it's a dog meme coin, so I call it doggy. Now, Trump signed an executive order establishing the Department of Government Efficiency, an advisory body led by Elon Musk, with the goal of reducing government expenditures and streamlining operations. Now, the effectiveness of this initiative will depend on its ability to identify and implement cost-saving measures without disrupting essential public services. Now, if successful, such measures could reduce government spending and potentially ease fiscal pressures. However, the feasibility and impact on employment in public sector remains uncertain. Now, this is something that you need to look at, yeah, because when you talk about government being efficient, we're talking about reducing expenditures, streamlining operations. All this can actually impact employment in the public sector. So we want to see how is this done, and is it done in a proper manner. But if it's does, then yeah, it's really going to help the US quite a lot. Okay. Because if you remember Monday's report, I talk about, how they can curb spending, increase tax, reduce tax, sorry. And all these are steps taken to actually slowly solve all these matters, to prevent inflation from rising, especially when they start slowly printing money, um, just to help balance everything instead of inflation coming down, it goes up. They don't want that. Then overall, this would be a good thing, for the US and Trump. Now, the next one I think is one of the most important thing, which is the trade policies and tariffs. While Trump previously proposed a 25% tariff on goods from Canada and Mexico and a 10% tariff on Chinese imports, he instead signed a directive instructing federal agencies to analyze the cost of living for Americans. Okay, now the directive does not specify immediate tariff impositions, but signal potential future trade actions. So this was kind of a relief for the market, to be frank. Everyone was, because Trump has already said from day one, I'm going to do this, and that. One of those, this was tariffs. They said from day one, I'm going to impose tariffs on Canada, Mexico, and China. Okay. So when he did not follow through with this, instead of signing a directive instructing federal agencies to analyze the cost of living for Americans to know better, the impact was the US dollar weakened immediately following the announcement, as investors view the delay in tariffs as easing immediate trade wars fears, right? However, targeted import levies remain a possibility, which could impact global trade flows, increase costs for US businesses reliant on foreign imports, and contribute to inflationary pressures. This is not over yet, yeah? Just to let you know. So what we're seeing right now in the S&P 500 is more or less a relief rally. But today, if you check out the X platform, he's already mentioning is, hey, I'm looking into increasing 10% tariffs on Chinese goods. So, this is just a delay. It's not something that said, hey, it's not going to happen. It will happen. It's a matter of time. But the percentage may change. Okay? The tariff percentage may change. Now, Trump is also expected to sign a memorandum directing federal agencies to evaluate trade relationships with China, Mexico, and Canada, which could set the stage for more detailed trade policies in the near future. Yeah. So take note. And if it comes in really hard, then yeah, of course, you will see a reaction from the S&P 500. You cannot, discount that fact. It can happen. But anyway, whatever you're seeing right now is more or less what I call a relief rally until we get more information on the next move by Trump and co. Okay. So the next one is the National Energy Emergency Declaration. Now, Trump signed an executive order declaring a national energy emergency to facilitate increased domestic production of natural resources. The order, titled Unleashing Alaska's Extraordinary Resource Potential, focuses on expanding oil, gas, and other resource extraction initiatives. Additionally, the order halts the so-called Green New Deal, effectively rolling back several Biden-era policies aimed at promoting green energy jobs, regulating the fossil fuel industry, and reducing pollution. Okay. Now, furthermore, Trump ordered the suspension of funds allocated through two major legislative acts, the Inflation Reduction Act and the Infrastructure Investment and Jobs Act. This move signals a shift in federal priorities from renewable energy investments to traditional energy sectors. Now, I know many will question and said, hey, this is the Inflation Reduction Act. Now, inside this act, they do talk about renewable energy and energy in general. Okay, so This is something, that's why I brought these two things in there, and you can see this suspension of these things. Okay. Now, the long-term implication of these actions include potential job growth in fossil fuel industries. Once again, at least for the next, 4 years until the change of the president guard. But they could also impact environmental commitments and alter the landscape of energy sector investments as well. Okay, so this is something that you need to look at, and plan your stock investments properly as well. Now, the lastly is the termination of electric vehicle mandates. Now, as part of his energy policy changes, Trump also signed an order ending Biden's electric vehicle mandate, which had sought to accelerate the transition to clean transportation. Now, this decision could have significant consequences for the automotive industry, affecting production plans and investments in EV infrastructure. Okay. So automakers with significant EV production plans may need to reassess their strategies in response to policy shifts, while companies focused on traditional internal combustion engine vehicles could benefit from a more favorable regulatory environment, right? So, as a conclusion, Trump's first-day policy actions reflect a significant shift in the US government's approach from the previous administration. While some measures provide short-term relief from immediate concerns, such as delaying broad tariffs, others introduce uncertainty in key sectors like technology and energy. Now, the economic implication of these policies will largely depend on how they are implemented and whether they lead to long-term growth, inflationary pressures, or shifts in global trade dynamics. Markets and businesses will remain cautious as they anticipate further developments in Trump's policy agenda. Okay, so I hope you're clear. I know there are other orders that he executed, but I chose those that we could see could impact the economy in general first. Okay, so with that, that's the report for today.